Okay, good evening. Drop a one if you can hear in the chat, please. I was just watching the live chat there. Neil's got his flames back. Is this a clickbait title? No, absolutely not. In fact, we're going to give it 10 seconds for everyone to jump in the stream, and then we're going to go straight over to that headline, and we're going to start looking through everything. So just let me know you can hear me okay, and we are going to get started. Perfect. Thank you very much. Okay, we're going straight over to the shared screen here for what has just come out from the IMF. And remember, whenever we see these warnings, it means that there's something very strange going on when you see this across a dozen different media outlets. So this is what the new Deputy Managing Director of the IMF has just come out with. World economy on brink of collapse. This is actually what she said. And not just that, as new Cold War risks annihilating free trade. In some media, they went on to pick up on some of her wording a lot stronger, that we're on the brink of a new Cold War 2, like what happened with the US and Russia. So no, not clickbait I was seeing in the chat there. This is actually what has just been announced. So she issued this warning at the Economic Forum in Colombia. And this is what was said then. So she's the Deputy Managing Director of the IMF. Remember, because I see this in the comments all the time, the IMF is not a charity. People keep saying, Neil, you don't understand, they're a charity. No, they are not a charity. The IMF is not a charity. It is a private global company. They are a money lender. That is what they do. They just have so much influence over governments that people assume they're some sort of a government organization or a charity. They are not. It's a private financial lender. So that's why they have titles like Managing Director, CEO, etc. So this is what they've said then. They've said these growing fault lines have started since the whole Russia-Ukraine business and since the tension between China and the US has caused these shifts away. Now, it's quite interesting, some of the analysis and some of the graphs that I've been looking at around all of this. Even the new trading partner, the largest trading partner to the US, is now Mexico. That is news to me. It used to be China. Mexico has now taken it over. She warned of costs amounting to trillions of dollars if the global economic split into two Eastern and Western blocs while speaking at the forum in Colombia. The split could see a repeat of the decades-long struggle between the US and the Soviet Union during the Cold War, is what she said. And by the way, we're going to be going through the US as well, some US data, how the US is doing, and also the UK. And we're going to, if we've got enough time, we're going to go on to Argentina and surprise, surprise, what has happened in Argentina. No surprise or shock to me, but I think some of you may be surprised as to what has just happened after we covered it last week. So she said fault lines are emerging as geo-economic fragmentation is increasingly a reality. If fragmentation deepens, we could find ourselves in a new Cold War. Again, you've always got to look at these statements are never just random, ever. They're always scripted and pre-planned ahead of time and then released as a press release to the media. So the question right now, feel free to drop in the comments, why do you think this is coming out? Why is this announcement coming out right now? The economic cost of Cold War II is what she called it, could be large. The world has become much more integrated and we face an unprecedented breadth of common challenges that a fragmented world cannot tackle. She went on to urge the world to protect basic tenets of free trade, saying net zero, and food security were under threat as a result. Well, look, food security is under threat anyway. It's been getting worse and worse year on year for the last few years, ever since 2020. She then said, and this is where it gets weird towards the end here, a retreat from globalization remained unlikely. So hey, don't worry about it. I know I've just scared everybody at this meeting with all these big people, but it remains unlikely. So don't worry about it too much. However, this is always interesting. However, after she's just dropped it down again, losses could amount to between 2.5 and 7% of global GDP. So we're talking 2.5 trillion up to what, 7 trillion as of right now. Again, yes, it is a lot of money, but this would be very much spread out. I don't see it quite the way she is making it out here. And yeah, Mexico is now the US's biggest trading partner. So we've got a lot of these articles. They're spread out amongst a lot of different media outlets at the moment. Feel free to have a read of this and let me know your thoughts. But at exactly the same time, so here we go, Wednesday, 13th December, you can see this has just come out. That was yesterday, the IMF one. And now today, the World Bank has just put out their big warning for the world. Record debt levels could put developing countries in crisis. Listen to the language that's being used. Collapse, crisis, things like that. This has been very carefully written and scripted. High interest rates siphoning money away. The irony of that. Yes, I'm sure it's the high interest rates that's siphoning the money away. Yes, from spending on health, education, and tackling climate. I'm surprised they didn't call it global boiling as they usually do, global boiling. And urgent action is needed to prevent record debt repayments by the world's poorest countries developing into a full-blown crisis. I just find this so ironic that they are using the word siphoning money away when we know exactly who it is that siphons the money away from a lot of, and it's not even the developing countries, is it? It's some of the most developed countries in the world as well. $443 billion. Stunning. That was the payment on the external debts of the developing countries. And you've got to ask, where do those payments go to? If you know, drop it in the comments below. We know exactly where all of this money is going to. It is just siphoning, but the siphoning is not the way they're describing it. The siphoning is going to certain three-letter organizations. Now, we could go through all of this. There's a lot to cover here, but I've got so much I want to talk about today that I want to just blast through this so you get a really consolidated video today. So again, this was on the Financial Times as well. This represents a rise of almost 40% over the previous 2 years. These debt payments now, a rise of over 40%. And what they're trying to do at the moment is they're trying to refinance this debt at a period when interest rates are a lot higher. So it's getting even worse for them. Record debt levels and high interest rates have set many countries on a path to crisis, said the World Bank's chief economist. In the past 3 years alone, this is really important as well, this one. There have been 18 sovereign defaults in 10 developing countries, including the likes of Zambia, Sri Lanka, test case for the WEF, farming program as we covered at the time, and Ghana, greater than the number recorded in all of the previous 2 decades. So in the last 20 years, and this is just the last 3 years alone, 18 sovereign debt defaults. That is absolutely staggering what's going on. According to IMF forecasts, emerging market and middle-income countries' average gross government debt burden is heading above 78% of GDP by 2028, compared with just over 53% a decade earlier. It sounds to me as though the IMF and the WEF and the World Bank and all the others are looking for a great reset of the debt. Now, another thing I picked up on, almost by chance actually, is do you remember this gentleman here? If not, let me refresh your memory. In September of 2020, so gosh, 3 and something years ago now, I made a video and I talked about this man here. And I won't repeat it here because it got in a lot of trouble. Obviously, the video, you have to click all sorts of waivers. And hold on, let's see. Will they make us click waivers? Yeah, here we go. You've got to click all these sort of, waivers even to watch the video. But I talked about this person. I said, this is very strange the way all this is leading towards. And I saw the other day and I thought, is that the same man? It looks like it is. He was the CEO of MasterCard at the time, and previously, before that, of Citigroup, so a banker. And it was talking about how he was going to be running climate things and everything else. He was going to be helping with climate. And I thought it was quite strange at the time. And now it's emerged, which I didn't even realize, that he is the leader of the World Bank. Now, let me tell you why that's really inappropriate, I think, the clash of interest. And that is right at the bottom here. You see it says General Atlantic as vice chairman. Well, General Atlantic is a private equity firm. And if you go on here, he is not listed anywhere. And I really mean that. You cannot find him anywhere at all on the leadership team. And I've been through all of these pages. He is not on there. So I thought that was quite unusual, because then I went on here and it's definitely the same company. AJ Banga, General Atlantic. The logo is here. It's the exact same logo here. It's quite clearly him. And this is why it's unusual. So he's in charge of this climate fund that is worth 420 million already. So this was just on the first day. 420 million came in that he's going to be helping to advise upon. Well, take a look at this. Where are we? Here it is. What do they invest into? They invest into climate. It says it right here. I'm not making this up. generalatlantic.com/about us. It says it right there. It's the first thing they invest into, climate. So let's just get this straight. He is now the leader of the World Bank. He's also the vice chairman of this fund. And at the same time, they're going to be investing money on behalf of the world, as it were, for a climate fund. Does anything seem a bit suspicious to you about this? Because obviously, to me, if I were in that role, and let's just be honest here, if any one of us were in that role, and we were quite greedy, let's just say, would we do what was right for the climate? Or would we do what was right for the investors, the shareholders, the fund? Would you want to look good as an investor? Or would you... Do you see the dilemma here? It doesn't add up. And that's exactly why I talked about him. And there's a number of other people. Half of them have already come through now, and those sort of forecasts have played out. There's still a couple more that are hidden away. They're in the woodworks, and I'm sure they'll come out eventually. But there's a lot of strange stuff going on at the moment. You're probably seeing this yourself. The news articles, this sort of lull that we had last week, where the news is just talking, well, it's rubbish, it's garbage every day. And we're seeing this sort of lull. But then there's some bigger things going on behind the scenes. And then what you'll tend to see is when these bigger things actually launch an action, something will happen in the news, something that to us is not big news, but they'll blast it everywhere and they'll make it out as if it's the biggest story in the world and you've got to see this story. And that's when a lot of these back doors sort of open and these things execute. So I'm just wondering if something is about to come up. What exactly is all this about? Why are they doing all this at this moment? It's a bit strange if you ask me, everything that's going on. So let's jump ahead then to US a moment here. And we just had some news out that US inflation has eased to 3.1%. Now, core inflation, this is where you strip out the food and energy aspect. This is unchanged. It's still at 4% per year, although that was expected. The economists did expect that to happen. The energy index decreased 5.4% for the 12 months ending in November. That is what's bringing down inflation, by the way, as we talked about a few months ago when I said the oil price is going to pull down inflation naturally. Biden will obviously take the credit, Jerome Powell and everybody else, Yellen, they'll take the credit for it, but it was nothing to do with them. It was simply the oil price coming down heavily, which is what has happened. Because if you look at the flip side of that, you look at food, and it shows here the food index increased 2.9%. So that gives you a lot more accurate look at what's happening with inflation. Food, because so much goes into food, I mean, it's enormous. And bearing in mind, some of the cost of food comes from energy. So you think of transport, that requires energy. You think of some of the packaging and the plastics and things, that requires oil and energy. And so we're getting a much more accurate reflection of what is happening. And that is inflation is still rising. It's just the energy aspect is really pulling it down. So on a monthly basis, prices rose by just 0.1% during November, while gasoline prices fell by 6% during the month. Now that's really going to help Biden with his sort of re-election campaign, if anyone actually believes that I'd love to know your thoughts if you think he's going to be re-elected. I personally don't, but I'd love to know your thoughts on it. Next then, HASBRO has just started laying off more workers. So 1,100 workers have just been laid off. So why is this? Well, their toy sales are slumping quite rapidly. So they make things like Transformers, My Little Pony, but they'd already cut 800 jobs this year. So that's a key thing to identify. There's already a cut. Now, for those of you investing, if you have any of the HASBRO stocks, etc., even though the stock price has dropped, you've got to look at it based not just on that, because they had 6,300 employees earlier. What's one of the biggest overheads costs? It's staff costs. So what is driving this drop? And I've got the stock here. One moment. If you look at year to date then, let's put it up year to date. It's actually dropped from, I think it was 72, something like, here we go. It's about 72 at the peak, and that was in early September. And they're now down at 48. So what's that? Just call that 30% drop on that. It's a large drop that they have seen. Now, if you look at what they've done and they're laying off a lot of staff, that will bring down overheads. And I think that's probably their plan to increase profitability. I don't own HASBRO, by the way. I'm not sort of pitching this stock. I'm just analyzing it for you because one of them came up today. And what's actually the reason? Well, if you think of during the lockdowns and everything, what was happening? Kids were stuck at home. Parents had the kids. They were trying to work. They went out there buying a lot of toys. So people expected in 2021, 22 that it would just drop off a cliff and that parents go back to, kids go back to school, etc., that people just wouldn't buy toys anymore. Well, that's not really how it works. Once you get into a habit, it takes time to break that habit. So kids were getting used to toys and more toys, and they're locked down at home. So it continued on, but it only continues on for so long. So what we're seeing now is as we're going towards Christmas time, we're going into this period where there's so much inflation that's hit the economy that people just don't have that same level of disposable income. So what suffers? It's those sort of things. It's toys, it's going out for ice cream, going out to the movie theater, it's leisure, it's things like that get cut back. So that's why we are seeing things like this. A number of other stocks and consumer cyclical get hit quite hard during recessions as well. So looking forward then, do we want to read this? I don't think so. It's all about Biden. Inflation fears down, consumer optimism up, economy may start to help Biden with voters. I'm not quite convinced, to be honest. No, I'm going to say no. UK economy falls unexpectedly in October as these higher rates bite. It wasn't unexpected at all. Well, not to me, and I think many of you watching, wasn't unexpected at all. We've done the analysis over the last few months, so it's quite obvious that the UK economy wasn't going to boom or grow. In fact, it's really stuck. I'll see if we've got a chart here. I'll pull a chart up in a moment. but it shrank by more than expected in October as higher rates squeezed consumers and bad weather swept the country. Yes, the UK is quite, because some people say, that's just nonsense. The weather doesn't affect the economy. Actually, in the UK, the weather does affect the economy, and it has done for a long time. It's not like, let's say if you're in California or something like that, it's pretty consistent. You have your seasons and things like that, which you'll see changes. But it's different because the UK, if you have really, and I know because I used to own businesses in consumer cyclical space, right? If you have really bad weather, people aren't coming into your businesses. You got cafes and restaurants and stuff like that. If you're a cafe or restaurant owner, drop in the chat and validate what I'm saying here. But people don't come in. They want to stay home. They might get a takeaway or something like that. That's a different part of it. Well, it's still the same part of the economy. It's just slightly different. But theme parks, for example, people won't go to your theme parks and all other things. So the money kind of just gets spent elsewhere. But it also means for tourism, tourists they might be planning a long weekend, or they're going to fly from Paris or something to London for a long weekend. They see the weather, they get put off. So the weather does affect things a lot in the UK, because sometimes people say, when I'm talking about this, they say, oh no, the weather, come on Neil, doesn't do anything. It actually does. It does affect things a little bit. So the economy fell 0.3% during the month. That's actually quite a big drop after growth of 0.2 in September. Next BOE rate decision is on Thursday. Don't expect anything. It's probably going to be a freeze. I don't think they're going to raise rates again. I'd be surprised if they did. It's probably just that they're going to freeze rates and hold it there for quite a long time. Most economists had predicted. Yeah, don't listen to what any economist said. They've been wrong for 3.5 years. So whatever they say, just sort of don't follow it anyway. No significant pickup is expected until January of 2025. So here we are. This isn't a great chart. I prefer trading economics because they show there's 4 different ways to measure the GDP. But you can see the BBC have pulled this chart here. And what's the issue? We're kind of stuck in this range of 0, no growth. And I think we're going to stay like this for a while, all of next year. I just can't see a huge amount of growth. Yeah, we'll see some little dips and things like that. But the UK is really in big trouble. And they know what they're doing. Even though the Chancellor will say certain things on TV, he knows exactly what he's doing. He's holding up, and with Andrew Bailey, holding up the rates to bring down the inflation. It's a really bizarre one. It really is, because they act as if they're doing everything they can to help you and help you with your mortgage and your cost of living crisis and everything else. They really are acting as if they're helping you. But behind the curtain, they're not. That is what pushing the rates up does. It makes you be able to afford less. Yes, it brings down inflation because you can't spend as much money because you don't have as much money. So that's actually what's going on. Now, the other thing that was interesting was, and ONS is the Office of National Statistics in the UK. They talked about the biggest driver of October's fall being in IT, legal, and film production. Now, that is interesting. I'm going to start tracking this now, because one of the forecasts I made, was it 6 months ago or so, was that I said we might see some slowdowns in IT, legal, film production, administration, and then some of the sort of more simple factory or labor jobs because of AI coming in, because of robotics. So this says to me, maybe, I don't know, because we don't have any data to back up this statement, but maybe there's something going on here with all of this. So that would be interesting to look at as well. Let's very quickly end then with Argentina, where he talked a good game, didn't he, Milei? He talked a great game of all the things that he was going to do, and yeah, I'm going to come in and I'm going to take a chainsaw to the central bank and everything else. Yeah, none of that's happened. He's sort of done a big U-turn. Let's see if we've got it all on here. He's devalued the peso. That's the first thing that he's done. and he's cutting the ministries from 18 down to 9. So he is actually doing that. He's cutting that down by 50%. But he's really falling in line here with the IMF. So Argentina owes the IMF more than $40 billion. And even though he acted as though, oh, I'm not paying them, I'm not going to be doing anything, well, he's done a complete U-turn. And this is the thing. This is just like Italy when she was elected. Oh, I'm going to stop the boats. I'm going to kick them all out. I'm going to do all this. And then when she gets elected, she does nothing. She's just falls in line with everybody else. Again, I'm not giving an opinion on that. I'm just saying this is what they keep doing. They say things to get elected and they don't do it. So he's moderated his fiery tone and put his radical proposals on hold. This reminds me when Trump said he was going to throw Hillary in jail, and then afterwards he, gave her a hug and all that and said, no, she's all right. We'll leave her. it's that sort of thing, including closing the central bank, cutting government ties with China, and adopting the dollar as the national currency. So he's now saying that he's not going to do any of this. I mean, let's get this back. Yeah, this is what happens. You see these politicians come in, and it seems as though the more crazy the proposals they make, and the more hardline that they make these proposals, the easier it is for them to get in. The people get behind them. It's all fiery, and then they say, okay, let's fall in line now. What does the IMF want me to do? What does the World Bank want me to do? What does the WEF want me to do? Let me oh yeah, what am I signing? Oh, I'm signing all these new pledges, which is what he's doing today. Yeah, we know how all this stuff works now, don't we? All right, that's it for today. See you tomorrow.